Your business is in sync with LiveSync. This webinar is powered by LiveSync Accounting and Xero Accounting Software. Introducing Attorney Dexter Destajo.
Now, to tell you the truth, of all the modules in Xero, aside from bank reconciliation, fixed asset module comes the second favorite module for me. Why? Because when I was starting up, like I was a very young accountant, I was doing this in Excel and it was very difficult to track. And I have trouble on managing the Excel, updating this every month. This is a problem. Not to mention I have to reconcile this with my ledger. So that is a struggle for me. And then now I don't need that. So I can rely on Xero to help me manage my report, the lapsing schedule for my depreciation. I can share the lapsing schedule directly to my auditor, and then the auditor would not have any issues on understanding the schedule itself. So this is why I'd like to do this. I love about Xero. I'm not very sure with whether QuickBooks Online has a fixed asset module already, but the last time I checked, no, I don't think they have. I'm not very sure yet, but I was checking, I think a long time ago, but there was nothing about fixed asset in QuickBooks Online. But in Xero, it was there when I started using Xero in 2013. It was there. And I fell in love with Xero, one of the reasons because of this module. So let's try how powerful this module is for us as an accountant, no? And also for the business. Now, access. The only person who can manage fixed assets are only standard users and advisors. That's very, very clear. And then account setup, we need to set up the particular fixed asset account. Okay, the asset account and then the contra asset account and then the depreciation account. We have to set that up. We go over the dashboard of fixed asset. We set up the fixed asset types, which becomes our default every time we're adding an asset. And then we do a sample of creating a fixed asset purchase and then registering a fixed asset. So this is something, a part of your process when you're managing a fixed asset is when you have to register your asset every time you are buying them so that it will be included in your fixed asset register. So in Xero, as terms of fixed asset is concerned, it does not only include a ledger for your asset account, for your contra asset account, and then depreciation expense account. It has also a separate fixed asset register where you would be able to see the information of all assets that you are managing in your business. At the same time, it would also tell you the depreciation policy that you are going to apply, particularly for each asset types. Okay, then we will do also monthly depreciation by using Xero. So Xero will calculate for us automatically. If there are errors in our depreciation calculation because our fixed asset does not reconcile, then we do depreciation rollback. Fixed asset reconciliation is the process wherein we want to match whether our registry and our ledger match. It's actually an end of the month procedure for an accountant. So you have this in one view screen in Xero, and you'll be able to distinguish why my ledger account is higher compared to my registry. You can have that reconciliation in that process. We can also explore fixed asset reports, including the depreciation report, which show us the lapsing schedule of our fixed asset items. And then discuss very quickly about limitation, and then when you can do the application for this fixed asset module. Let's jump in and go to our fixed asset module. So to go to the fixed asset module, we go to accounting and we go to fixed asset dashboard. Okay, now since we are very new to fixed asset, we are going to set this up from scratch. Okay, so here in our case right now, we have to set up, we will start by setting up the start date because Xero would need to understand at what date are you going to start calculating depreciation? And since our company here is a new company, just started operating this month, I would say I would select a start date the beginning of the year. Okay, there will be a lot of options here, but for us, we would select the beginning of the year. Why January 1? Because we're doing a calendar year. So normally the first calendar year of our accounting cycle, that is our selection as a date. So I would save that is the date now. And then you would notice that we have now one initial entry line for laptop. Now remember, okay, remember last week we created one particular transaction and we created the bill. Okay, let's go to that balance sheet we have. Where is my balance sheet? So this is my balance sheet. I have a computer equipment here. I'll open the ledger for this by clicking that blue amount. Brings us to the ledger that I have actually purchased two laptops. Wow, I created 2 laptops here. So let's open the ledger. So here, there is one particular laptop I have created here, the 20,000. Okay, once I created this, automatically the asset account is here. Let's do additional assets. No? Let's try to purchase additional assets later. But let's continue setting up the fixed asset. So what I would do, we go to settings, set up now the asset types, and then the accounts that we need to use in case we need to do disposal of the asset. So here, I would create my first asset type. Now, why are we going to create asset type? We need to group the assets, the fixed assets into group, because per group may have different depreciation policy. So every time we apply a particular fixed asset type, the default of the depreciation policy for that type would apply to that fixed asset item. So let's start with the first asset item called computer equipment. And then I would select what would be the asset account for this asset type, what would be the depreciation account for this asset type. Now take note, I have pre-populated already the necessary chart of accounts of this fixed asset. So just to give you very quickly what I was talking about is I can actually go here in my chart of accounts. You have to build that first, that necessary fixed asset chart of accounts. I'll go to assets here and then, okay, my mistake. Okay, you'd be able to see the fixed asset I've already built here. When you are going to set up a fixed asset account, you have to make sure both the asset type and the contra account would be a fixed asset type. No, so like here, you have to select the fixed asset account to make sure that this asset will be connected in your fixed asset module. If you are not, if you're using current asset, that asset would not be connected to your fixed asset module. So be very sure that your asset account and your contra account, which is the accumulated depreciation, is set up as a fixed asset type. Now, let's go back to the setup. Now here, I have used the contra account, and here I can just select depreciation. Now, maybe some of you would want a specific depreciation expense per asset type, that's fine. But for me, I would use one depreciation expense for all asset type. Then here I can set up what type of depreciation policy that I would have for this asset type. Now, as you would see a lot of familiar depreciation methods in the standards that is allowing us to use. But you can do declining, and then there are different kinds of declining or the full depreciation at purchase or no purchase. So what I would do now, which is very basic for us and more acceptable, a standard would be the straight line. Then I would be asked whether, how do I calculate the depreciation? Is it full month? What does it mean? All months, the depreciation expense would be equal. Actual days would mean whatever the number of whatever is the number of depreciation per year divided by 365 multiplied by the number of days in the month that you are recording. So in the case of June, you will calculate multiply by 30. Now for me, and which is most of the auditors would prefer, would always be the actual days, so then we select actual days. Now, how do you calculate that? If there's a way of doing that, you can do rate. So this is, you would calculating, let's say, 25% per year. That's one option. Or the simplest way is deciding as to years. So what I would do 4 years here as the useful life of this particular asset type. Okay? Then I'll do another one for furniture and fixtures. Okay? I don't know if I've created. Yes, I did. Then the contra account for that. Be very careful. You have to select that properly. And then I have that depreciation account. Still, I'm using straight line, actual days, and then I'm using 4 years. Now, you might have different useful life. It's up to you, depending on your accounting policy. But for me, I use 3 or 4 years for this type of accounts. Then I would do, finally, would be motor vehicle. Because maybe you're buying a motor vehicle, and then the contra asset is also accumulated motor vehicle. That's correct. And then I'll use also depreciation here, straight line, actual days, and then I'll use, let's say, 7 years. Okay. So on different types, you can have different useful life. It would applicable. Maybe you would have like computer equipment that you can say computer equipment category 1. So then maybe that's 3 years. Then you have maybe computer equipment category 2. Maybe that is 5 years. So you can create as many asset type. You can duplicate the types with a different subcategory. Then you can do that. No, it's not a problem. But for me, I want it to be straight that all computer equipment would always be 4 years. All furniture would be always 4 years. All motor vehicles would always be 7 years. So now, I am now ready to start my first transaction. Now let's create my first transaction. So let's try to buy furniture. Okay, so I would create a bill here, open a new window, and then I would say furniture supplier. Okay, I'm buying that today. Maybe the invoice is 3456. I attach that. I leave this 0. Then I would do would be, I would say tables, for examples, and there, no? And then I'd say I purchase 2 of this, right? And then I'd say I bought this 5,000 per set. And then very important is to select the right fixed asset account. So I would use furniture here. Make sure when you are building this the first time, you're recording this the first time, you have to make sure before approving this that you are using the proper fixed asset account. And because this supplier is a VAT supplier, then I would do input 12%. I select this as branch 1, and this is department 1 transaction. I would approve this. So notice, once I approve that, and because I'm using a fixed asset account, when I refresh this dashboard, I would see now additional draft fixed asset in my list. No? So it's showing me 2 separate because I was doing 2 sets. So in Xero, if you're doing 2 or 3, 3, it will create a duplicate, meaning they are tracking separately, individually per item. Then I would do another one would be, I would just copy this one. And then create another supplier, let's say Toyota, for example, because that is what is our car brand is. Okay, I was buying an Hi-Ace, for example. Okay, 1 van, and then this would cost us, let's say, 1 million. Okay, 1 million. Okay, very expensive in the Philippines. And then I would select this as motor vehicle. So again, no, not expense, the asset. Make sure you are choosing the right asset. Then I would approve that again. Once I have approved that, that item is already added in my system when I have added this. So what happened here? Why every time we create a purchase, it reflects under the draft tab of the fixed asset, all the items that I have purchased. The reason being is that the principle here, your registry, fixed asset registry, must be the same as of your ledger. Because when calculating a depreciation, Xero would rely on what are the assets registered in calculating depreciation and not on your balance sheet ledger. Okay? Be very clear about that. So it could happen that your ledger and your fixed asset register may be different. That's why you need to reconcile. The later part will show you how the reconciliation would work later. So the next step after you buy immediately the asset is to register to the fixed asset module the assets that you have purchased. So let's do one by one. Let's start with the laptop. Okay. When you open the draft, what would happen is it will now ask you to fill in the details. So what happened here, initially it pre-populates all the data that is already available. So maybe your warranty would be 1 year. You can put the serial number if it's applicable for you. Then very important is I would want to select what type that I will apply for this fixed asset item. Then normally what happened when I select that, it pre-populates all the information I have set up as a default for this item, including the depreciation method, the averaging method, and the useful life. I would select the year with the period where I would, because I'm doing actual days, then I would select the actual date of purchase, because assume that this is where you start using this asset. And then you can actually, you know, put all the details you want, maybe where it's located, who is holding this particular asset. You can put the description here to track this particular. Notice that you will always have that link between the bill that you have created with this register. So when you click that, it brings you to the bill, so that you would validate that this is actually being posted in your ledger. Okay. Now I would register that. Keep doing that for all other drafts. Okay, tables and chairs. I would select furniture, and then I would select today. I just approve that. Again, draft. Now normally, a best practice would be to take a photo of your asset and then put a fixed asset tag number. If you have that, then you can put the tag number here, and then you can attach the photo of that particular asset on the bill, okay? So that you'd be able to track that properly and be able to have a physical image, how it would look like in case you would need to do an existing test of your fixed asset. Then I'm doing the last one now for the high A's. This time I would be selecting the motor vehicle. You can put the chassis number, permit number, all this in this description, because that would help you in the future in case you would need to go back and know what are the details for that. Okay. So, and again, just to add, when you're buying vehicles, for example, you can use this attachment and put everything, that information in one place. So as an accountant, you know where you can find. So now we have registered all these transactions here, an asset. So what would happen now is, let's try to look at the fixed asset report now, no? Fixed asset reconciliation. So here in your reports, there's what we call fixed asset reconciliation report. What does it tell you? This will tell us that your balance sheet in your asset register is actually matching, okay? Now, for a computer, your balance sheet is showing 45, but your asset register is showing 25. There is now a variance of 20,000. So that is a problem that you need to fix before you start depreciating. Furniture, there's no problem. Your ledger and your register is the same. Motor vehicle is the same. So your only problem now is to really fix why there is a 20,000. So how do I check that? First is I would go to another report, which I will bring you also, would be your depreciation schedule report, where it would show you what are the assets being registered and what are their status, basically a lapsing schedule for this all asset list. So these are your all asset list. Technically, what you have registered is only one computer equipment, which is 25, right? But then it's showing your asset is 25, but then you have an excess of 20,000. So what do? I would go to the balance sheet. Where is my balance sheet? So many windows are open now. So again, this is what I love about cloud accounting, because I can actually work on multiple windows at the same time, you know, without closing an existing data entry transaction. So here I would update this now. You will see now my ledger is showing up all other asset account. So see, my my register is showing 25, my balance sheet is showing 45, right? So where is this? Where's the balance sheet? So 45. So why is the difference? So I would want to check now what's going on with my ledger, why I have more in my ledger versus my register. So now I found that there was actually one entry that was created in ledger but was not reflected in the system. So what happened in this case? Now I understand. I think what happened here is that this was a repeating journal. This is, I think, what I did, repeating journal. So if you are creating a repeating, which normally you would not do that, but I think last week we did this as a repeating. That's why I created the ledger. So one limitation for fixed asset is that when a bill was created for the purchase by purpose of a repeating journal, it will not add automatically in your register. So you have to record this manually. So to fix this variance, the right registry should be the 45,000. So what you need to do is to add manually. Then now we're going to fix this manually now, our fixed asset register, to add the additional laptop that was not registered. So I would say laptop, I would want to look at when was this registered. This was June 13, okay? So what I would do, this is June 13, I purchased this in June 13, and then the asset was 20,000, and then I select computer equipment, and let's look at this very quickly. This is branch 1 as well, okay? So this is branch 1 and department 1, and then auto-populates everything here, and then that's, I just click that registered. Now I have added the missing unreconciled fixed asset. If I would refresh this now, what would happen is I fix already the computer equipment register. So now there is no more variance. Your depreciation schedule would add another laptop here as an item. Expand that so that we'd see everything. Okay, so now there's 2 lines now. Our fixed assets are all good. Now you are ready to do the next step. Now, take note, the next step would be to actually run the depreciation towards the end of the month. Now, before you do that, you have to always look at your balance, your fixed asset reconciliation, that it match. Because otherwise, you will have an overstated or understated expense in depreciation, or your asset will also be overstated or understated, as the case may be, if there's an error for either in the register or on the ledger. So you have to make sure before doing any registration, this is all zero. If this is zero, if this is not zero, then you have a problem. Then when you depreciate, you create another error. Okay, so to avoid that, check that, and then if all zero, you can proceed now by doing your first depreciation by clicking Run Depreciation button. In this case, since this is our first depreciation and it started January 31, I would want to jump directly to June 30 because this is where the month that I have started buying the assets. So now you see per asset type, it calculated already the depreciation for us. Now, before I do that, let's do a quick glimpse of what is our depreciation schedule prior to doing the depreciation transaction. See, there's no depreciation, it's all zero, there's no disposal, there's an accumulated depreciation. And then your assets here, there's nothing accumulated depreciation done. Now, what we do now, if I do a confirm the depreciation, it will tell us now that we have actually created the depreciation transaction. Let's check what happened in our reconciliation. So as of June 30, it recorded already. Again, see, there's no variance in our depreciation entry. Let's look at your asset depreciation schedule report. You would also see that the depreciation are properly recorded. That is matching in our registry. Then the final step is actually looking at your balance sheet. So where is my balance sheet? My balance sheet, let's update this. Because we recorded, the contra assets now will show up in our report. And then in our P&L, where is my P&L? I refresh this. The depreciation entry would now show up in my P&L now. So that's how the register is linked with your ledger and in your reports. Okay? Now, again, limitation, I would discuss this. If you are recording a bill, let's say you're buying a laptop, but by mistake, when you approve the bill, you use, let's say, office expense. Instead of fixed asset, you use office expense, you approve it, what would happen? Would that be added as a draft in your fixed asset? No, it will not. Why? Because it did not trigger the fixed asset. So, what if I will edit the bill from office expense to fixed asset? Would that now registered as a draft to fixed asset? The answer is still no. So what is the solution for you? What you would do is you have to add that manually, okay, in the fixed asset. The same thing is true when, for example, you bought paper. Accidentally, you recorded this as computer equipment and then approved the bill. Will it record a registry in the fixed asset? The answer is yes. But then you committed an error, right? When you're committing an error, for the entry you realize later, what you would want to do is to edit the computer equipment to an office expense because it was paper. So you edit the bill, change that from computer equipment to office expense, and update the bill. Well, the updating of the bill, when you made the correction of the bill, would also correct your fixed asset. The answer is no. So what do you do for the draft? You just delete the draft. Why? Because your test would always be to make sure your balance sheet ledger and then your asset register would always match. Okay? So do not register any entries that was created by mistake. You just have to delete that particular transaction. So what I would do, let's say you want to delete that, there's always that option to delete, no? On the registry form. Yeah, you can always delete that item. Now, the only difference is when you're creating new is that you would not have a, see, you would not see the link to the bill. There's no link in the bill because you're creating this manually. You would see here in the notes, you would see that you have created this manually in the fixed asset. Okay, now you would see at any time the transaction on what are the being depreciated on this particular asset by looking at the value tab. You can also dispose this. For example, how would you dispose this? There's an entry, ask, let's say I would sell this to 800,000, for example. This is how you can dispose. What is the revenue or P&L account that you would recognize the proceeds? Do you want to calculate net of depreciation or not? So if there's no depreciation, you select this. If net of depreciation, you select this. And then the date of this disposal. So let's say I would put a date of the disposal. I would show a summary. This would tell me what would be my transactions. And then when I click review here, I would see what would be the entry in my ledger. If you accept this entry, you click post. Otherwise, you edit the amount. Okay. So I would not do that today. I don't want to make a disposition of my asset. Okay. What else we can do with the asset, fixed asset? You can also import a list of your asset in the system. So maybe you're converting from another system, you're copying your book value from the old system to the new system and the new conversion date. You can do that by downloading this template. This is a CSV template. You pre-populate this according to the instruction given here in the Excel. So it gives you an instruction of how you would want to upload the data. Again, important to know, anything that has asterisk to it, these are mandatory fields. Then when you import this, actually when you import this, it goes first to the draft. So then you can fix from there if there is something wrong. So if you're dealing with, let's say 20 to 100, I suggest you do importing. Okay. When you are importing, make sure before importing you have set up the proper asset list so that it would not bounce in the import. You can select the date format, and then you can also find now the Excel or the CSV to import. Okay, that's one you can do here. If you want more information, the beauty of this, Xero has also videos very quickly to show up here. Now, one final thing is, for example, what if I created an error in recording depreciation, right? Because it's automatic. Is there a way I can go back and then fix and then run the depreciation again? The answer is yes. What do you do is just click the run depreciation button, and then you would see this button here, rollback depreciation. Just click this, and let's say you are now depreciating July and August, and then when you run the August, realize that there was discrepancy in your reconciliation, but you already recorded or pushed the depreciation button. Now you fix your asset and asset register and then your ledger. Once you fix that, you would want to fix also your depreciation expense. If you have done that, to do that, you have just to go 1 month backward on the month, or select on the month where you would want to correct. So in my case, for example, if I created an error in August, then I would select August 1, meaning it will wipe out the depreciation that you have initially created in Xero, and then you can do another recalculation based on the corrections you already made in Xero. So what I would do here is I would do, let's say I would run, because maybe I've made an error on June. So what would happen is I would delete, okay, so I've rolled back, and then I'll just cancel this. I do not confirm this, because what would happen, I have done the May 31 depreciation in my last record. Let's see what would happen if I delete that. Okay, your depreciation is also removed. Your schedule here would also be removed. Okay, Xero again. Let's go to your balance sheet. Your depreciation here would also be removed. Let's refresh this. Okay. So it's removed, and then let's look at where is your balance sheet. So lack of Excels here. So our balance sheet, when I remove that, then your contract accounts is also removed, right? So then what you do after you have rolled back, fix the errors until your register and the ledgers are matched. Once you have done that, you are now ready to do a depreciation again with the correct amount. And then it updates again everything else, all the reports you would have here in the system. See, depreciation would go back, and then your balance sheet would also update now the contract accounts. So that is fixed asset for today.